Breakfast Club. My name is Darren Hagock, and here we are on the 21st of August 2024, and let's have a look at the market. Let's get straight to it. Okay. Amidst all these lines I've got sitting on here, the rest of this fair value gap imbalance, it's not really a fair value gap, it's a price imbalance right above us here that has yet to be filled. We've also got a little fair value gap below us that was created yesterday. So we may see a revisit of the top of this, fill that price imbalance here, and then work our way back down to the top or inside of this fair value gap here, this busy, and the consequent encroachment lines up with this old high. So I'm looking at these two areas right now today. Let's get down into the lower ranges here and see what it's been doing. See how it's just staying inside this hourly fair value gap, which is working the whole inside of that. So I'd like to see this purge these equal highs here, get back into that level we were talking about. If we take out this mean threshold of this candle here, looking to go higher, take out the relative equal highs here, and then finish filling in that price imbalance above the market. The 15-minute. At 7 o'clock, as Michael calls it. Let's go to the 1 minute here. $7 o'clock. I'm looking at this imbalance right here, or this busy and this busy here. I tend to look for the very first ones, or this rebalance. And wait for a price to drop below those when you see this. And then 7 o'clock, if it's taken out an old high and you're looking at relative equal lows, like Michael, this is something Michael's been talking about in his videos lately. At 7 o'clock, you look for any recent highs or lows created, looking for relative equal highs or relative equal lows, and look for jagged, then look for this run on the liquidity below the market here on these relative equal lows. So I look for this busy. As soon as you see it traded through the busy, like right here, trades back up inside it here. That's where you can get short. And then I wait for, once we've taken out these lows, because you're always looking for the next swing point. And when they're taken out, you look for a change in direction. And when that gets broken to the upside, we're looking for continuation for old relative equal highs. So, for example, we saw this. That was our entrance. And I'm sure there's better entrances up here, but that's the entrance I'd be looking for. Continuation, fair value gap inside the range, all the way back to a CAM Model 1, CAM Model 2 entry actually. That's the midpoint of that consolidation. Wait for this candle here or another fair value gap below you to get a SIBI to be created. This one looks like the only one. So when we trade above it, right here, we opened just slightly above it, trade back into it, all the way down to this candle here. Body's respecting that gap. So I always kind of put these inversions on there. So when they become inversions, they're the ones you could play off of. See how you traded above it here? You're inside it. You trade above it one more time, come back, tap it perfectly here, and then we leave with these relative equal highs. You see a new, as soon as that high is taken, you look for this fair value gap starting to form. Trades below it. Look for this order block here as well. Trades below it, comes back inside it. You want to go short. Look for your swing points. Pull your fib tool on that. Trade the 50% or take the whole range from 8 o'clock. You want to see it trade back into that range. Or until you see an old low get taken. Fair value gap form. Imbalance form. Trades above it, the imbalance right here. Trades back into it. Starts running higher. So you still have these relative equal highs here. We have these little imbalances. I think it wants to come back to those. Then you've got imbalance of relative equal highs here. You got relative equal lows down below you. Wait for one to get taken, and then look for the other. Let's see. We got relative equal highs above on the hourly, of the market, and below the market. Bitcoin. Look at that. We have a high taken, created, value gap, drop below it, comes inversion, come back up all the way inside it, slam down. Breaker that takes this low. Beautiful thing when you see it. We called this yesterday, that breaker. Traded above it, come back inside it, went north, reversal, come back to the breaker. See this breakthrough here now, come back inside it. Find support of this. I'd like to see this start running higher now. At least get into 50% of that range. Oh, I did it already. It's hit 50% now. So we want to see it stay above here. It's taking out that high. Look for that reverse to happen after that high is taken out. 50% of the range has already been hit. If this level right here does not get broken to the upside, you're looking for a potential continuation on the downside. Looking to break this little trend line here. See the trend line? That'll be a trend line phantom. Look for this level here to be the support or resistance level. If you find it support above, look for it to run higher into this fair value gap SIBI. And if it closes below it, comes back into it one more time, look for it to run back down in through these lows. Right there's the key right now. I'm going to put this level right here, because when we come back to this tomorrow or whenever, I want to see if this level provided some support. And we'll see what happens. Right now it's providing a nice little entry to go short. I like the idea of going higher right now, so We'll wait and see how it reacts off of here. Because you got this one going longer, this one going shorter. So you're really stuck between this one and this one. So I want to see it get below this, come back, find some support. And then we're going to dig through that level right there. So that's kind of the zone you're in right now for Bitcoin. Still looking for more upside in soybeans. That was the upside objective we looked for yesterday. So or for the week, it'll have to be now for the week, because if we're on the daily here, if we get another big push up, look for that level. Still looking for this wheat level here, the lows. Sugar came back to our level here. We're calling this on Monday. Where are we calling this? The 20th. Looking for it to come back to that level. Just came short of it, just shy of it here, which is, what's the low on this level? Is 81, 1781, and the high on this is 1780. So it was 1 penny short of hitting that. 1 penny short, and then continue on the downside. Relative equal highs, we're going to see those get taken, and then a potential run back into that box that we're showing you from in July. There's liquidity above and below the market right now. We're finally hitting that level in live cattle we're calling for. Just hit it today, this morning. Cocoa is now back inside that gap. Still looking for that consequent encroachment to get hit. If not, you can just see how that's reacting off the body of that right now. I'm going to get this out of here. So it's hit the bottom of the fair value gap here. This inversion. Trade through it, come back to it. Now, if we react off of this and go short, then the impression that I wanted for it to go higher and take these highs out. Again, we've already taken them once. I've taken the liquidity below the market. I'm coming back into the middle of that area. So this inversion now becomes important for me. We're either getting above it, or we're just going to react off of it and continue coming lower. So we'll see how this acts for the rest of today, and see if we can start digging into this. Buy side liquidity. Coming back to an order block. Lumber. That mean threshold is a line in the sand for me. We start trading through that, look for the lows, and then the return back into trading below this level. If we can find support off of this, then to go lower, we're looking for a run back into this imbalance. There's a couple of gaps down here. So that's my level for, do we provide support? There's a fair value gap here. We've taken these old relative equal highs out here, and you're looking for that. So if we trade below that on the close, come back inside it, and then take this low out, I'm looking for continuation on the downside. Little piggies, we've had a return back into that fair value gap here. This imbalance has now been filled right there, and we have a reverse below this gap, come back up, return in and fill that gap, and we've got this one just a little open now. So I'm looking for it to return back into there at some point. Yeah, makes sense, of course, some point. If we get a return back into these equal lows here, this fair value gap here, I would like to see that provides support. right off that candle and then continue back down, heading for the sell side liquidity. If not, I want to see how it reacts off of 89.1. So this is my area of interest here. Gold still pushing higher. Keep your eye on that level right here. Gold still going higher. You'll see, keep your eye on the lower levels, the 1 hour, 15-minute, for the potential reversal. Keeping this in mind here, we may catch the reversal much earlier on the lower time frames. Looking for the same principles you're looking for in the higher time frame stuff. And what else we got? Finally hit that level I was looking for yesterday. Hit it quite nicely. Now we're getting a reaction of it, so Intuitive Surgical Instruments. I don't know, I can't even remember who that was talking about that. Hello, Talk. Hans. Good morning, Hans. Erica, good morning. How are you today? Haven't seen you in a while. Just stopping by for a quick hello. Moving my daughter to college today. Ooh, sad day. Congratulations. Sad day, but a great day. Your daughter's going off to higher education, and it's a sad day with the empty nest. I don't envy you, Erica. Joe Mac, good morning, sir. So that looks like that hit the level we're looking for at 484. After that, I got nothing until we see some reaction off of this. That may, if that's the high, based on the price leg I was calling for yesterday, if that high sticks now, I'm looking for this fair value gap here to tell me about where it's going to go next. Otherwise, you can suspect potentially higher prices depending on how that fair value gap acts today. That's just picking stocks. Back to our regularly scheduled program. We're just going to kind of sit on this for a bit here and see what we can see. He's just study price action right now. Where are we inside this range? We're right in the middle of it. So can you predict which direction? You got relative equal highs. You got relative equal lows. And we talked about these little imbalances down here when it was up here. Come back to. There's the first one. Then we wait for the range, the opening range, to set itself up. The regular trading hours starts at let me double check. 8:31. 8:31. See where this puts us at 7:30. Sorry, 7:30 my time, 9:30 New York time. You've got relative equal highs here, a little more jagged down here. I should put one here called regular trading hours. Low imbalance here. It's price imbalance. Let's come back and revisit it. There's also one little one sitting right in here as well. News events do we have this morning? Crude oil inventories at 10:30 and FOMC minutes at 2 p.m. today. Keep your eye on this little area right here. Hey, is he? Not feeling too good, so no lecture for today. Relative equal lows here, relative equal highs. You have this fair value gap fill here on the 1 hour. $14 to $24. Looking for that liquidity below the market at new day opening gap, Wednesday's new day opening gap. So the acted side, you've taken this liquidity here and these equal lows here and filled that fair value gap on the 1 minute here. Let's wait for this range to open up. Let's look at this new regular trading hours. Ended up being right here. Close to my colors. Let's fade that down then. Anas, good morning. We have news at 10, non-farm payrolls annual revision. Mats, hello. When you have time, can you show me how to draw new day opening gaps, new week opening gap highs and lows on the chart? Thanks. No sound. It's on. No sound, no sound. There's no sound. Stand by. No, it must be yours. You're on your end because my audio is working. My audio is working. So the new day opening gap is set by the close at 1600 and the open at, there's an hour gap in between. And at the close of the day, there's that 1 hour missing. You mark the low or the high of the close. Sorry, the closing price and then the open price at an hour later. That's your new day opening gap. New week opening gap starts on Sunday. Whatever that opening gap, whatever the opening price is on Sunday, and Friday's closing price is the new week opening gap. So find those prices on your chart, mark them down. Looking for the liquidity above the market now. Now we swept the lows, we make jagged, running for the highs. It's been taken now. We shall patiently wait for the opening range to continue to set itself up so we can see. Oh, that sounds noisy. Everybody's having showers now. Okay. Get back in here. The gap here. Continue to wait for this opening range to set itself up. It looks really choppy. One of those days we just sit and wait for something clean to set up. We may not get a trade today. Let's see what we get. I like we're finding support off this level. Continue push higher. Hold highs in the hourly. And we're running back up into this level here. Just nibbling something off here. That's where my sell was. I just took a sell on it. Closed an order out there. So I want to see how it reacts off this level now. If we can get through this, we're looking for these relative equal highs up here. If we just get a reaction off of that now, and we start to drive back down. So keep an eye on that in the 1 minute level. See how we've reacted off of that. Let's see another push higher yet. Get a run down further. Looking at this breaker here, we've got a swing point here. breaker here. Last one is the most sensitive one, right? So watch right here now. See how kind of reaction we get off of this candle here. That's the opening. If we get a reaction off this and it continues to push higher, we're just going to keep revisiting it again, look for the mean threshold. But I'd like to see that go higher off that open there. So we have a breaker here and a regular order block here. This is an immediate rebalance. So watch see where the bodies close on this candle's wick. Going to be above 50%. Okay. Another 10 minutes or more. Looks like this candle's holding, so this mean threshold is the line in the sand for me. Just trying to study price action, what you want to see it do. We want to see the wicks, this stay above 50% of that wick, and we got the wicks do the damage. It's just coming back to this fair value gap inversion here, and we're looking for it to continue to pushing higher to get some support off of this. Then you want to see it climb up on top of this and start pushing higher still. Into the mean threshold of this candle now. So you're between this one and this one. Fair value gap, that's the one we were talking about. We found, climbed above this one, found support at it, climbed above this one. You want to see it find support at this one or the mean threshold of that candle. I don't want to see it close below that. Now that we've run these highs out, this imbalance becomes an area of interest for me. That's the mean threshold or consequent encroachment of that price imbalance. Watch if I draw this out here. See how that's the consequent encroachment of that reprice rebalance. We trade below it. We're looking for a run on these lows. Get back into this inversion again. I don't like all this constant retapping of it. Starts to lose its luster if it doesn't get enough legs to get through this mean threshold of this candle here. The fact that that's supporting you between that mean threshold and this one now. So it didn't quite make that that consequent encroachment didn't quite tap it. That's like hallmark of that sign Michael was talking about, where it doesn't quite come back to the consequent encroachment. It's more positive for a higher run. I want to check into that rule. Again, I find that interesting because it's sometimes you'll notice that it never actually touches the consequent encroachment. It just falls short of it and then continues pushing higher. How much weight does that hold? 5 more minutes. Morning, Derek. How you doing, buddy? I'm not worried about the likes anymore. People like it, they like it. If they don't, they don't. So what's our objective to aim for? We have these highs now have been taken out before 10, and we have these relative equal highs above us at 1928, 1930. So that would be the upside I'd be looking for. Four more minutes. Now we've taken out this high. We still have that. These intact relative equal lows below the market. I like the mean threshold of this candle. It's inside that little fair value gap imbalance right there, the one we're just running into. See how that acts in there. It's like a 20-second delay there. So we've now filled that fair value gap there again. How we act inside here now, whether or not we find some support above it, start climbing higher. Back to find support at this candle. These relative equal highs. And we'll see if they provide support to go higher. Or if we get a refill of this down here. Let's wait for 10 o'clock, see what happens here. Now we've run out the liquidity above the market. We're back into that big. It's 10 o'clock here. Push back up. It's the highest premium array I can see right now, and we're just tapping into it. We have lots of relative equal lows below the market here. And if this week of Jackson Hole is, as Michael says, just seek and destroy, running liquidity here, and then gunning for it down here. So let's see if they take out those relative equal highs here first. Run back up into some liquidity from weeks ago. See if that's ends up being our upside objective. So again, keep your eyes on that upside. Relative equal highs on the 15-minute 1 hour. I'd like to see it come back and get us a little springboard off here. One more revisit of this. See if we can't get or come back to this opening here. $8.79. All inventories. The cleanest the price action, is it? We're digging into the daily price imbalance. At 985, starts from here to 944, ends over here. And we're still looking at this upside objective here. Is there anybody else in here that is in Michael's mentorship? Or Caleb? You're watching his daily lectures? And how are you enjoying it? Are you learning lots? He's leaving lots of nuggets in there, let me tell you. There's some beautiful information in there. He's never shared with us. And I've been with Michael since 2016. And he's sharing stuff in there that is definitely not stuff he shared with us, even in the charter members level. So you guys that are new to this stuff you're getting yourselves a super treat here, starting you right from scratch. That's a pretty awesome gift he's giving people for free right now. So I hope you all get to learn lots from it, and you can find your setup, find your price action that works for you, and you get some freedom in your life. Let me see this wick hold 50% or more. See, the body's closed. Oof, right on the 50. Probably just below the 50. So look for a run in here right now. Go. Center that wick. Take it to the downside. What are we hunting? Liquidity here. There's equal lows down here. Wait for 10:30. That news release. We're in Lambo. It's gold. Maybe it needs a cheering section. Go in, Q-Go. I have to call. Bullshit on price action right now. Not a good look. It's not looking good. One more risk for me. Yeah, it's a little bit. Agreed, Eric. It's all over the place right now. There's not even a clean setup in here that I can see. If anything, I'd like to see it come back to 50% of that wick, or 50% of this down close candle here, or at least the bottom of this candle right here. Come back up, revisit that, leave this portion open, and then continue down to the sell side liquidity. We've already ran it here. We have relative equal highs up here. So what I'd like to see is this portion stay open, find some support off of this. Key off of this 19,891, and then continue going lower. That's a pullback of 70 to 75% off from trade entry. %50 of that consolidation is right here, 883. So those are kind of like key levels. So watch right there. Oh, sorry, it's right there. 883.5. Right there. Good. Eating right through that. Oof. Okay, so now we're running right up to. It did fill it. Now you want to see a reaction off of that and come back down now that it's filled. Right to the top of that candle. If this becomes, now that we've taken this out, if this becomes support, I want to see this candle here give us some support to go higher. That becomes inversion. So we can get all the way. If we trade through it, we can come all the way back inside that. That become an important level. And I can get rid of all that back here. Start treating today's one. There you go. We just ran that liquidity here. Now I want to see this, take this high out here, and we find some support off of this candle. here. 50% of that. I want to see this stay open here now. Start climbing higher. Good morning, abs. You're going micros this morning. I was wondering why my chart looked different. For some reason I have a 5-minute inversion for vertical marks on June 13th. London session sensitive at that area, even off consequent encroachment. For 5 minute, you said? June 13th, London session. That did stay open. We're still inside this one here. If we close below this level, then we're looking for another run back down in here. Usually I'd like to see it just start to really book it out of here now. We have no openings. It's just a return back in to fill that imbalance. Or that SIBI there one more time. I don't want to see this get revisited again here now. In a swing right there. It's got to get above this level here. For some reason I have a 5-minute inversion for every market June 13th. It's just ironic coincidence unless you see something. I'll just see this continue to climb right out of here now. Theory of the news release in 1 minute or 28 seconds. Oil just shot up on that news release. Took out its highs. We're just stuck in limbo. We're compressing here. Waiting for something to happen. Got right into the consequent encroachment of the daily price imbalance, which is 19,915. We're just hanging out in the middle of this thing here, waiting for something to happen. Broke down below here now. Finally ran the liquidity. Below us. Ooh, I'm choking on water again. You all right in there? I'll be right back. Good paramedic in there. Mom was choking. I didn't go check her out. Yeah, it's kind of a dodgy one, hey, Derek? You know, you look at where we're at. I'm just going to try and compress this. They're just running these little sniper runs inside these little ranges. Just taking people out here. You got upside liquidity here. Relative equal highs, lows. Guess it'd be a place to practice your turtle soups. Oh yeah, right here now. This is the one I'm interested in. Taking out the buy side now. Taking out the sell side. Taking out the buy side. My word. Daily collection. Drop off the coins in the liquidity bag. They'll be happy. Not me. Yeah. Too much jostling around for me. So we finally did hit that buy side liquidity we were looking for. They've taken out those highs, and there's this 944 for the daily price imbalance has now been filled. 944. I called that earlier. Just so you know, that was one of the levels for the price imbalance daily. And that's filled now. So if we get a reaction off of that and back into this range, that's what I'll be looking for there. So just to drive straight back down or push above this, get some support here and continue pushing higher. It's a tough one to call today. So I'd be looking for a return to here. We'll start up higher. So here, this one here, here, or this here. Now, ideally, you want to see this fair value gap stay open 50%, which would probably put you right around this imbalance here. So abs, look at that one. We'll keep your eyes on that level there and see what kind of an area of interest we get from that. %50 puts you just under it, right on that 1, 2, 3 objective. $902. Push through that 950, 944 level. Fair value gap you see over here. Where is that one? How far back is this one? Way over here. Oh yeah, that was the premium array I was mentioning a while ago. That was the highest premium array for inversion. And we can come back and found support at it. Go higher. Okay. So I know where that one was. I found support at that level. So on a 4-hour basis, what have we got? There's a tiny imbalance sitting right there. I'm looking for this next level above us here at 19,991. What's the daily? I'm looking for this every time we break a new high. You're looking for that fair value gap to form, body to break it on the downside, come back, find some support at it as the possible reversal. Now, I'm looking for something to support a price. Okay, so the mean threshold 19,983. Look at that on a 4-hour. That's the mean threshold of the up close candle. So I'd like to see this, if that's the mean threshold, is going to hold. Not that you want to predict the high. We're going to just keep my eye on that level right there. So we act inside this fair value gap. Hit the mean threshold. I'd like to see that go higher now. Below this. So I didn't get a chance to get on that. But that was the mean threshold of that 4-hour candle. Close. Back to that candle again. Now we finally hit the high of this candle here. Now, do we get a reaction off of this? Nope. Still pushing lower. So that's the first one. Second one. Third, and then down in here. See how the body trades below it right there. And then pops back in, taps it, and goes. First one doesn't, second one does. Now I'm looking for down in here now, a revisit of this level. I'll put a box down here. Oh, it gets already there. That's the area I was looking for right here to trade back into, and it hit right there. From there to there, and hit it. So now you're looking for lower liquidity below the market here now. Find some support at this and push lower. Lux, good morning. How are you? Is that what you're going to be trading now, the micros? They are slightly different than regular E-mini. Yeah. They're slightly different, but the setups are still the same. I guess I could put that back on. What everybody's interested in seeing is not micros. How's that? The better abs? There you go. There's the run of liquidity below the market there. So now what I'm looking for is once you've taken out these old lows here, now I'm looking for that fair value gap that formed here to give us a reversal back into this range again now that we've saw liquidity above and below. So I'd like to see this create a fair value gap in here. And then let's trade above it, come back in, find some support at it, then eat through this breaker. We've got to get through this breaker to the upside. We eat through that, find some support at that breaker, look for a run back up into the premium array again. Or at least 50% of the range we just created here. It's 11 o'clock now. So I'm looking for a 50% to 62% retracement back into that range. for a setup to form here. London low. Yeah, there's equal lows down here. Level right here. That's the low. I want to see this get taken out to the upside. $9.50, so I'm looking for a retracement back into that range now. Not breaking this high here yet. It's just putting the wick through it. You want to see a body get through that. You just come back and find some support at this. Start pushing higher. If we take this low out, again, you're looking for those lows. The London lows, 19,790. I'd like to see those get taken out after we've retraced back in here and then drive higher or drive lower. And leave those for after the retracement that occurs usually around 11 o'clock. Body above here. That's that bull trap, you see. If you get in too early, you get caught in the trap. Wait for it to close above it. It's 11 o'clock. Build it again. There, so we find closed above it, find support at it. Now I'm looking for the 50% range. Oil sure did a quick reversal. Keep your eye on usually typical time and price, right? 11 o'clock usually runs out the 9:30 low inside the range it creates. And then 11 o'clock, there's usually, you have to look for a reversal back into that range by 50 to 62%. So here's the reversal. And right there's the entry. And we'll see if that makes it all the way up there. Stop loss be sitting down in here. I wouldn't want to see it close below this now. It's got to continue running from here. See how it reacts inside here. This would be like the silver bullet, or this 1102, or silver bullet 11 o'clock. I want to see this one stay open. So that would be the silver bullet for the long for me. Some legs here now start growing. If we do attempt to make a, a run on these relative equal highs above us here for lunch hour, and then the London lows, if you're into the seek and destroy thing, we'll see how the 50% of that range hits first, just so I can have a mic drop moment and say, yes, I told you it was going there. It's been a bit choppy this morning. And if we get through 50%, so you move your stop loss now to break even. You take a portion of your trade off there. Or break even. Actually, I'm in profit now of it. So turning this into a zero stress trade. It's been too choppy all day, so you don't want to take any losses. So just shy of 50% so far. So once it hits 50%, just keep in mind that could be just the retracement back into that range, and then the continuation on the downside for the next price leg down. You can't just assume it's going to run all the way back up to the highs again, but who knows, right? See how it acts at that 50% range. You want to see this really get some power here and just shoot right through that 50. And for those of you who are 840, there's already 40 handles right there. From the entrance I gave you here to there's 40 handles. That'll be 50 handles. 44 to 94. That's 50 handles right there. 50% on the Beezer. I like this retap, not just finding it tap and then start pulling away quickly. I like to see that continue pushing higher now. If you run to 62%, you take a portion off there and move your stop loss to 50. This level right here. Good tool here. So the bodies are sitting at 50% right now of that consequent encroachment of that fair value gap. Wicks do a little bit of mohawking. Then you want to see whether or not we react off of here and just have that little bit of retracement we were looking for 50 handles. I don't know about you guys. 50 handles is nice on a day like today. I gave that to you right here to right there. So looking for that low to get taken out again. If we start taking this out here, we're looking for a return back into this level. Curry Fish, good morning. Good call, buddy. Thanks. Thanks, Derek. So I want to see this kind of roll over here. It's just sitting on the close of that. So I'd like to see that start going down now. Come back up inside this. 50% holding price. Let's see where we go from here. Get back to the body of the order block here. For me, there's no other reason to come back up here unless you want to run for the highs again. And we're just slightly close below it, so Goes below it again now. Better sign for me for lower prices. I'd like to see that pick up some steam now. See how it's acting off of this level? Now look inside this range here. We're at 50% of that range. % of that range, which is the midpoint of this fair value gap right here. So are we going to pump back up through this, find some support and start pushing higher again? Or we're just going to keep driving through it and heading for this objective down here. There's 70% right there of that optimum trade entry. Come on down here. Do, 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 do. $75% of that little range. So here's where you want to see it get some support off of this and start pushing for higher prices. Didn't quite get this. We're inside that small range, optimum trade entry reversal. Keep your eye on that level right there. So if you did get in here off of this for a short, 77 to 60, that's 21 handles from there to there. So if you're entering in there 50%, you move to break even, 62% pay yourself, move to 50, then it goes down to 70. Take portion off there, it comes back, takes you out. So that would have been in profits there, unless it ran all the way down to here and you would have got out right there. So it just came back full fill of that fair value gap again. We have not got through it, so still downside objective is here. Here, because we have lots of upside. Still using this fair value gap as support. This level in mind, if we break through this, that's the discount array inside this larger range here. Just 50% discount arrays. This guy here is just below 50%. And then those London lows look like a tasty treat for lunch. Yeah, I agree with you, Derek. I'm out of here shortly anyway. This has been a bit of a choppy day, but there's a nice little run this morning for 50 handles anyway. And this call here, couldn't get in on it, but it was a nice little run on liquidity below here. That was that mean threshold of the 4-hour candle. So we'll see if we just get continuation on the downside here. And then that'll be it for me. I just want to see it reach for this level in here, because we're really between this one and this one. And this one looks like it's providing some support. So I just want to see it hit this. Give me some clarification or edification on premium and discount arrays inside small ranges. We also have that little pocket down there too. This will be how many handles from here? 77 to 43, so it's another 34 handles. So I gave you 50 handles to there, 40 handles to there. There's your 90 handles for the day, if it gets there. And oh, there you go. You're welcome. You're welcome. Now we're looking for London lows if you can. Right, that's it for me. I hope you got something out of that today. I hope you managed to scoop some pips, calling this level here and this level here. I hope you were able to grab yourself some money. And if not, I hope you got to learn a little something about inversion fair value gaps and how wonderful they work, time and price, expectations of things that can happen at 11 o'clock, taking out 9:30's session open, and then the reversal between 11 to the range that was created is usually 50 to 62%. So if that's your if that's your expectation and you learned a little something about these inversions, then I'm happy. I'm glad that it helped you out, and I'll see you again tomorrow. Thanks very much for tuning in, and be safe out there. And if Michael's on again tomorrow, I won't be seeing you because you're smarter if you head over to see Michael. Other than that, thanks for tuning in. Those who stuck around, 18 of you stuck around to the end. I appreciate your time. I appreciate you spending time with me, and I will see you tomorrow morning bright and early. Take care. I'll make sure I turn things off today so stop streaming.